taxes. Um, and what I have here for you is a video. And the reason I have this video is there's information in this which we have already heard a couple of times, but I want you to hear it from somebody outside this group. Just because Minette has been saying the same things, I have been saying the same things, Ida's been saying the same things, Jolene's been saying the same things, but it's like we are all like people in the same group. But when it comes from an outsider who's also saying the same things, she's from a travel nurse, but not from this group. And I really like the way the things that she said. And there are a couple of points that we should take away from this, which we listen to it. It's a quick video. It's about 5 minutes. And then I'll go into my presentation.
Taxes as a travel nurse. Without further ado, let's just get into it. So, taxes as a travel nurse can be very, very complicated if you are new and you don't even know what to do. So some companies will actually deduct your taxes for you, so you don't have to worry about it, and then you just get your paycheck, and then you're good to go. And some companies, you actually have to do your own taxes. So that means they are going to pay 100%, and then you deduct your own taxes, and then you are literally on your own, which I kind of find that a little iffy because I feel I don't know. I like it better when they are deducting me taxes because maybe it's not used to. So I don't have to like worry about like the money that I have to save because I'll be tempted to like touch that money which I don't want to touch. As a travel nurse, you are considered an individual contractor, so you are literally your own boss, your own company, you are working for yourself. So they expect you to register your business, to like have like a business account, and then have your own accountant to do everything for you. You have to do all of this yourself. Just find like a professional, and then you just let them do everything for you. Like just don't if you are not good with taxes and then not good with like keeping your records and stuff, find an accountant and then they will do it for you. They will show you, explain to you the stuff that you have to keep, the stuff that you have to like save and how much you have to save. Like they will show you all the nitty grits, like everything, every little thing of it. They will show you. So just find a professional, and then your accountant will tell you what to claim on your taxes. There are some few things you can claim as an individual contractor or like a self contractor, like a business owner. You can claim like your food, you can claim like a rent. The rent I'm not really too sure about, but then like I said, make sure you have like an accountant, like a professional, they explain all of this to you, and then they will actually give you a list. So like maybe save your food allowance, like save you buy anything whilst on your trip, whilst like on your traveling assignment, save all your receipts, save like your if you bought gas, you save it. If you do groceries, save that. Your phone bills, save it. Your license, your license, pay for it, save the receipt. What else? Your scrubs, save it. Like if you bought new scrubs for the job, anything that is related to the job that you bought, save it. Your your insurance, your service insurance that you pay every month from your own pocket, save it. Like save the receipt, and then you can use all of that to claim at the end of the year. So like I said, like it all boils down to like your accountant and what they would say. So just try and find if you are trying to go on this journey, just find an accountant, let them explain this whole finances to you before you actually go for it, because you wouldn't want to like owe the government at the end of the day, and you wouldn't want to make any mistakes whilst doing this. And you can also save like whenever you get paid, you save like 50 to 10% of your money. I think that's the last video. Keep it aside, don't ever touch it, like don't be tempted, keep it aside, and then you should be good. Like honestly, you should be good. Okay. I just wanted to like share this because taxes is very, very important when it comes to this country in Canada, and you really wouldn't want to mess with the government when it comes to taxes. So just be careful. ask your questions, do your research, and yeah, I think you should be good. Honestly, like, don't just go for it. In fact,
Okay, so how did you all like that video? Wasn't it a great video? Everybody, I hope you all heard it. Can I get some response?
Yes, we heard it. I heard it.
Okay. So it was good, right? Coming from somebody outside this group. And the few things that I want to touch on. So first thing she said, taxes are complicated, right? For a travel nurse. Second thing, you saw the number of times she said, get a good accountant, get professional help. Third thing, she said that you're literally on your own once you're a travel nurse, so you need to find somebody to help you out. And the fourth thing that she said in the end is save 15 to 30% of your income, put it aside, and don't touch it. So these are the four takeaways that I feel are important to remember that we have all been saying, but I think coming from outside the group, you realize that it is true. We've been teaching you the right thing all along. We've been trying to convey. And the most important thing that I wanted to highlight here is getting the help that you need, because a lot of people find that hiring an accountant or a professional is very expensive, but the benefits that you'll get are 10 times more than what you would pay. So you will see that in the year 1, year 2, year 3. Yes, the taxes will look a lot, but then when you calculate the percentage of tax that you pay when you hire an accountant and how much you save, that outweighs the amount that you would pay as professional fees. So that's just something I wanted to put out there, because I know a lot of people are concerned, oh, I have to pay this much to an accountant. And I'm going to go through that again in my slide. So today I'm going to talk about tax saving strategies, basically. Okay, I just have a few points there and I'm going to go into detail in each one of them. And then if you all have questions, you can either post it on the chat or write them down, and at the end, I'll open it up for questions. So a few tax saving strategies that we've talked about in the past, but I'm going to go to them in detail. The first one is deductions and write-offs, which we all know there are a certain amount. They're limited, but they are there. So for example, your meals, professional fees, auto expenses, travel, those kinds of things. I'll go in detail. I'm just going through this quickly. The next one is investments. What kind of investments are useful for tax saving purposes? So there's RRSPs, TFSAs, the new thing, FHSA that's come out. Then we have another strategy that we can use is using the situation of a family member with low income. The fourth one is employing your kids. Fifth one, investing in your business. So basically reinvesting in your business in such a way that it's a tax saving, and at the same time, you are investing in making your business better so you can earn more money. So like purchasing equipment, spending money on courses, supplies, those kinds of things. And the last one is home office deduction. So basically, you're incorporated. Most of you are incorporated. So basically, your corporation does not have an office. So your corporation is out of your house. That's why we talk about home office deduction. Now, the most important thing is to make it real, because the tax man is, of course, sitting there waiting to get our money. And so we have to be careful as to how we do these things. That's the reason why you need to have a professional who knows the system and who guides you the correct way. In order to make it real, to support, you remember the nurse was saying, keep everything, keep all your gas receipts, keep all your meal receipts, keep everything, because you don't know what the accountant will be able to use and what the accountant won't be able to use. So it's better for you to keep the 100%, give it to the accountant and let them do their job. So we have to set up the structure such that it's legit, it's real, so that if you ever get audited by CRA, that those expenses that we claimed cannot be denied. So that's one thing that I make sure that my clients sail through an audit without any problem, because first of all, I make it look reasonable. It's not like I made $200,000 in income and I wrote off $100,000 in expense. Like, no one's going to believe that, right? It's the industry. Now, if you're in construction, okay, yeah, maybe. But if you're a travel nurse or an accountant or somebody who's working out of an office, you don't have that much expenses. So it all depends, right? And that only an accountant or somebody with experience in that industry or in the tax system will understand or help you understand. So I'm going to go into each of those points now in detail. Any questions so far? Okay. So the first one, deductions and write-offs. So going a little bit more into detail here. Meals and meetings. So keep all receipts for any meals or meetings that you go out to, right behind the receipt, who you went out with and what it was for. Okay. The accountant could use it. The accountant may not use it. There are some creative ways of using it. It depends on what you discussed. You could have gone out with a colleague from work. You all could have discussed future contracts. You all could have discussed how to help other nurses, anything that's business related. So that meal could be considered. You could have met with an agency person, right? So write that and keep the receipt. Office expenses. So stationery, computers, office furniture. You got to read between the lines here. So you get creative. I'm sure everybody buys these things in their houses. And as a travel nurse, you would need them because you have a home office. So get creative, see how you can utilize all these things that you're purchasing towards a write-off for your business. Again, keep the receipt. Your job is only to keep the receipt, keep all 100%, so that we as the accountant can then decide what we want to use. And we try to maximize. But if you don't have it and it's just on the credit card or on the bank statement or something like that, then it basically limits our ability to fight for you during an audit, because the government always wants to see receipts. Even though the credit card bill will say Staples, they don't know what you bought at Staples, right? They don't know if it was a computer or a chair or maybe you bought candy. So you have to keep the receipt. Similarly, at the gas station has to show gas on the bill. You could have gone to the store and bought something, right? So that's why we always have to keep the receipts. So I wanted to show you, I have something like this, which I keep my receipts in. Okay, this thing. And I put the year and I keep changing them. I can put a sticker and change it. And inside, it's got a whole bunch of things. And it's pre-labeled over here, if you see. So the labels have got all the tags here. You can put gifts, donations, office expenses, everything. It's pre-written. You can get them at Walmart. You can get them at Staples. They don't cost more than $10. Buy one or two and then just keep cycling them year after year. So you have your current year, you have your previous year. Once the previous year's taxes are done, remove everything, put it into a bag, and then change that for the next year. That's how I keep my receipts for my personal taxes. And I found that as a very good system, because once a week, I just file all my bills and I have everything. I keep even my groceries, my Walmart bills, everything. Next item, supplies. So your scrubs, medical watch, shoes, PPE items, anything for the car, hand sanitizers, all these kinds of things can be stethoscope, anything that you have to buy medically or anything that you need for your job that you need to keep with you, need to keep on your desk at work, need to keep in your car, need to keep in your home. Make it a supply. Again, keep all the receipts. Travel. Now, some of you do have reimbursement for travel, some of you don't. So depending on how it is, and some of you have to pay for it and then get reimbursed. So any which way, any expense that is going out from your credit card or bank account, you have to keep the receipt or the email or the confirmation or anything that you got, you should keep it. You should either print it out or keep it, or then have a folder on your computer where you save all your confirmations, your airfare, your boarding pass, all those kinds of things. So airfare, car rental, hotel, taxi, Uber, Airbnb, whatever it is relating to travel. Now, when it comes to meals, I think you'll have a per diem or something like that. So again, if you're paying for the meal out of your pocket, you need to keep it. Because what happens is, if you're getting a per diem or a reimbursement or something like that, that goes as part of your income. and then your expenses come off as a part of your expenses. So they kind of wash each other out, right? So that's why you should keep all the receipts. The next item is telephone and internet. So you have your cell phone, you could have a landline because your family is at home, you need to call them. Kids are at home, they don't have cell phones. Internet, roaming fees if you're going out of, I don't know, some people go to the US. Any kind of thing relating to communication, keep all those receipts. If they are electronic, download them and save them on your computer. That's what I do. So I download my all my cell bills, my utility bills. Everything is electronic right now, right? Nobody sends you paper anymore. So all your utility bills and stuff for your house also, you can just make different folders. So keep one folder by the year, say 2023, under your My Documents or something. And under that, you make different folders like utility bill, telephone bill, Enbridge, hydro, whatever it is, and then just save the bills over there. And you can do that like one for yourself, one for another member of your family. If your spouse is also there, you can do that. Then the next one is education and professional development. So any courses, anything for continuing education. We all have to do continuing education. We have to do minimum so many hours a year to fulfill the requirement for our credits. So those courses, anything that you pay for, anything to enhance your skills, any membership subscriptions, those kinds of things, keep all those receipts. Okay, because that's a valid, very valid tax deduction. There's no gray area there. Then R&D. Now this is a little bit of a creative area. Because we are in the, like you and me both, like I'm an accountant, I have to read up on things, I have to keep up with what's going on, changes. Same with you guys in the medical industry, all you ladies have to keep reading up on new things, new technology, new ways of doing things. So we have to read books, we have to read magazines, we have to watch maybe TV shows, we have to get ideas, we have to brainstorm, we have to take subscriptions to certain things. And while you are traveling, like waiting for your flight and doing those kinds of things, that's a good time to do that. So those items can classify as research and development. So don't just overlook that area. If there's anything that you feel you'll have that would classify in that area, please keep that, those receipts. And then the last one is moving expenses. So moving expenses, there's two ways to claim this. This is under personal or business. Now it all depends on how far you've moved. Like if you've moved provinces, then yes, it's a big move. Also depends on whether you've moved your whole house or whether just you moved and your family stayed back. So the accountant will basically guide you. But again, moving expenses, you need to keep all your receipts. You could deduct it under personal. There is a special moving expense deduction. Or you could also write it off under your business if it does not qualify for the personal moving deduction, because the personal moving deduction is a big one. Okay, and you can get quite a bit of a refund if you actually did a whole move, like you moved from Ontario to Alberta, you had to move everything, sold your house, had to have movers, all that kind of thing, then it's a big deduction. So something to keep in mind. Okay, the next one, investments as a tax strategy. So the question always becomes,
Dana,
yes.
Sorry, question. I'm saying pardon. Speaking to you in French, sorry.
Sorry, I cut you.
Yeah, no, sorry. I was speaking to you in French, sorry. I got a question. So for the moving, does it matter if you're a small business owner or anybody who moves around the country would be entitled to the tax deduction?
That's right. Within Canada.
Okay, anybody, BU tax, that's like a general write-off, right? Not just for business owners. I just wanted to clarify that.
No, generally, yeah, for anybody.
Okay, yeah, I just wanted to.
Not only for travel nurses, yes.
Yes. Okay, thank you.
Okay. All right, so investment as a tax strategy. So the question always is, what is right for me? Everybody's always confused. Should I do an RRSP? Should I do a TFSA? What's the difference? How does it work? Why should I do this and not the other one? What will happen when I pull out the investment? Do I have to my investment is stuck, like I have no liquidity. So many questions, right, around these investments. So last Wednesday, Jolene went over what's an RRSP, what's a TFSA. So I'm just going to briefly go over this. So an RRSP is basically your retirement savings plan. The tax benefit of it is as soon as you contribute to an RRSP, you get a tax break. So you get some form of a tax deduction. How much? That can only be determined based on your tax situation. Usually it's 20 to 25% of what you put in. So if you put $10,000 in, you will probably get 2,000 to 2,500 reduced in your taxes. That is the usual math. So RRSP works for people with high income and who don't have too many deductions, like travel nurses. We don't have a lot of deductions. We do have very limited deductions because we're not really a business. We are more an incorporated employee. Like a lot of the expenses are covered, right, by the agency or the hospitals or whatever. So the deductions are limited. And somebody who has no other strategies, like the other strategies I talked about, or which I will be talking about, if you don't have any of those options, then the best option would be RRSP right now. The next one is tax-free savings accounts, TFSA. So a TFSA basically, soon as you contribute to a TFSA, there is no immediate tax benefit. Okay. So again, don't get confused. TFSA, no tax benefit. RRSP, immediate tax benefit. Now, TFSA is basically whatever you invest in a TFSA grows tax free. So if you invest in a TFSA, any money that you make, say you put your money in stocks, your TFSA had $5,000 today, and 2 years from now, that same $5,000 became $10,000. So that $5,000 growth is not taxed. If you did not have that money saved in a TFSA and it was just in a regular non-registered account, you would be taxed on that 5,000 growth. Okay, so that's the difference. So it's a long-term benefit, tax benefit, and again, it's limited to the amount that you can put in. So the government doesn't say you can put in as much as you want. It's there's a limit every year. So this works for people with lower income who don't need RRSP and they have a little bit of disposable income. Somebody with a high income and has a lot of deductions, they might like, you know what, I don't want to put my money in an RRSP. I'll pay the taxes and I'd rather put my money in a TFSA. And somebody who has other strategies available, like you can use your family members, you can employ family members, then those people don't really need to do an RRSP. Whatever money they save, they'll put it in a TFSA and they can use it for whatever they want later. So I've just given an example here. So someone with $200,000 of income, which is most of you, and say $20,000 in deductions. Was there a question? And taking a salary of 100,000 from the corporation. So basically 200 minus 20 is 180. And then you take a salary of 100 on a T4. So then you're left with $80,000 in the corporation. Okay, you have donations and medical expenses. So those will be a write-off under your personal taxes. So the $100,000 is basically your income on your personal taxes. So if you put an RRSP of 20,000, you can save taxes of up to 5,000. Okay, then you take this 5,000 and you can park it in your TFSA. This $5,000 refund, or if it's a refund. If it's not a refund, then basically your taxes are reduced by 5,000. If it's a refund, you can take that 5,000, put it into a tax-free savings account, and then you can use it to invest in an RRSP next year. So again, it's a case-to-case basis. So it's very difficult to say that this example will work for everybody. That's one of the reasons we don't go into detail, because then people misunderstand. So just understand that RRSP saves you taxes right now. It's meant for retirement. It's not a put and take account. You can take it out in a tax efficient way when you are not working. So say, for example, you have a contract for 3 years and then suddenly there's no contract for maybe 6 months or 8 months, then that year is a good time to pull out your RRSP because you're in a lower tax bracket and you will not get taxed on that RRSP as much. So alternatively, someone with lower income can park their funds in a TFSA for some time and accumulate it. And when they become a high income earner, they can take the TFSA money and transfer it to an RRSP and use it as a tax strategy. Any questions? Okay, everyone's awfully quiet.
Yeah, sorry. Can you go over the difference between the RSP and the RSP again? No, sorry, the TSFA and the RSP again, please, and thank you.
Okay, so the RRSP is a registered retirement savings plan. And as the name suggests, it's basically putting money aside for your retirement. The reason that the government gives us a tax break is because the government wants to encourage people to put money towards retirement. So that's when you contribute to an RRSP, right off the bat, you get a tax deduction for that year that you have put in an RRSP. So basically, right now is the time to do an RRSP before March 1st. If you do it before March 1st, it works for 2023 tax year. So sit down with your accountant or your financial advisor, figure out if there's anything that you can do. Because we've had many situations where people have come after March 1st and they're like, oh, I didn't know this was the deadline, especially for people who are new like you, who are going into the situation where you are the employer, you are the employee, you are taking salary and you have no idea what's going on. Ask somebody like today or tomorrow before the 1st of March, because it takes a little bit of time. So 1st of March is the deadline for RRSPs for 2023. So you still have an option to save money for last year. So that's an RRSP. Is that clear?
Yes, ma'am.
Ask the question, yeah. And then the tax-free savings account, the TFSA, is basically an account, as it says, tax-free. So whatever savings you put into that account, they grow tax-free. So right off the bat, there is no tax deduction. You only get tax break on any money that you make on your savings inside the tax-free savings account. Okay, so the decision that you have to make is, do I want to save taxes today, or do I want to pay the little bit of tax or the lot of bit of tax and just put my money in the tax-free savings account? One more thing I want to talk about here, since you brought the question up, tax-free savings account is misused a lot in terms of, it all depends on what investment you hold inside a TFSA, because you should be maximizing that. If you're holding an investment like a GIC or something that's really small and not making you any money, then you're misusing your TFSA, right? Because you should be maximizing your TFSA. You should be putting it in things that are moderate risk, little bit more aggressive, so that you have that option to make money, which is tax-free. So you should put mutual funds, stocks, ETF, something which is making you money. Don't be scared of that, because all of you, I think most of you are younger than 40. So it's a good time to take advantage of that. And again, it's a limited amount. It's not a lot that you're putting in there every year. So make sure that your investment in a TFSA is a wise one. And again, the financial advisor or your tax person can help you with that. So I hope I answered that question.
Yes, ma'am. So
Okay.
one more. So
Yeah.
instead of maximizing your TSFA, whatever it's called,
Yeah.
can you rather use it for RSP than TSSA?
Tax-free. Call it tax-free. It's easy.
Oh, tax-free.
Yeah,
Instead of
tax-free.
maximizing it in tax-free, do you advise for rather put it in RSP?
Again, it depends on your income. So if you are in a high income, go RRSP. If you're in a low income, then you go TFSA. But most of the travel nurses should be maximizing their RRSPs. So that's what I've just seen from the situation right now. So I think RRSP would be the first option, TFSA second option. So if you have if you're a really good person with your money, and at the end of the day you've saved a lot, then maximize your RRSP to the point that it's given you the maximum benefit on your taxes. Again, that has to be worked out by the accountant, because putting too much also does not beneficial to you. And then if there's anything left over, say for example, I have $30,000, okay? And 25,000 is my sweet spot for RRSP, then I would put 25 in my RRSP and put 5 into my TFSA.
Wow.
Okay, and then next year, suppose I'm short on money, I had some big project at home, I could take out that 5,000 from my TFSA and top up my RRSP because TFSA is not locked in.
Okay.
Okay, RRSP is locked in. So when you take out the money from your RRSP, you get taxed. That's why you cannot take it out prematurely.
Do they have a percentage of calculating how much tax back you can get depending on the RSP that you put? Say, for example, if I put 5,000.
That's what I mentioned, that it is, if you can take 20% to 25% or whatever you put in. That usually works in the math, but it all depends on the tax situation that you are in. So say, for example, you put $10,000, you can say you'll get $2,000 to $2,500 tax reduction.
Okay. Oh, tax reduction.
That's simply to
the
understand.
tax you can get back. It's not the money that you can get back, but it just reduces your tax.
You don't get money back unless you have excess paid your taxes. A refund comes only when you overpaid your taxes. Most of the travel nurses are not paying taxes. So you guys will only get a tax reduction because at the end of the year, you have to pay tax.
Okay. Just a
right?
Okay.
Yeah, so that's why we don't use the word refund or taxes back, because then again, that creates a misconception. Oh, you said I'll get money back and I didn't get anything back. I had to pay. So it's not that you will get, it is a tax reduction. Because all of us are in that same situation. We are all self-employed. We all have to pay. If you are a T4 employee, you would get tax back because your taxes are cut every year, a month, and they overcut the taxes. That is why all T4 employees get a refund. So basically, the government gets a tax-free, interest-free loan from all of us for the whole year, and then they give us a refund, and everyone is very happy that we lend the government at 0%, and actually we are the losers. So when people break even on their taxes, I'm the happiest person. I'm like, oh, you didn't overpay. You did not give the government a tax-free loan.
Yeah. Okay.
But that is not our mentality, right? We get a refund. We feel, oh, okay, we did something great.
Okay.
So, okay, let's move on.
Thank you. Thank you.
No problem. Welcome. Okay, now this is a nice one. Okay, family members with low income. So we all have family members. A lot of us are immigrants. A lot of us bring our parents here, and a lot of us help our brothers and sisters to come here. So this is a great strategy for us, especially because we want to take out more money from our company in a more tax efficient way. So mom and dad, if you have sponsored your parents, they are here. You know that when you sponsor your parents for the first 10 years, they get no assistance from the government. That's the time that you can use their tax returns as a way to take out money. So you can put them on a T4, you can pay them as administrative assistants or anything. But again, you have to sit down with your accountant to see, because they could have CPP, OAS, which could get affected. They could be on disability or other benefits, which could get affected. So it's a usable strategy, but it depends on each person's situation. Same thing with a brother or a sister. Brother or sister comes here to study. Student, low income, just beware of student loan. There is a limit on how much they can make. But if they are here, they finish their studies, still not yet working in a full-time job, their tax return can be used to help us to be more tax efficient in taking out money from our corporations. Kids 16 years and over, we could use them as bookkeepers, administrative assistants, doing the housework, because we are working so much. We need somebody to do that, right? So those people the kids could be used for that. Spouse, many of the spouses have to stay at home because we have small children. And if we are traveling all the time and we don't want to spend money on babysitters and daycare, and it makes more sense for the spouse to quit their job and stay at home, that is an option. Put your spouse on a T4, T5, take out more money from the company. So these are the strategies, again, that your accountant will sit down and work with you on a case-to-case basis. So you can put them on payroll. You can pay them as a dividend. So basically, you make them owner of your company along with you. We can use them as babysitters. So mom and dad can be used as babysitters. They can claim it as business income, write off a few expenses. You get it as a daycare deduction. That's a big deduction on your personal taxes. And again, make all this legit. So it's money has to actually flow. This account, that account, make it all real, so that if CRA comes, you may be doing this for 3 years. In the 4th year, CRA will come and say, okay, you know what? I want to check this particular thing. Let's see what you're doing. Now, if it's just on paper and doesn't really show that mom and dad were being paid and so and so and so forth, and there's no real documentation, there were no real TFOs created or there were no real stuff created, then it will all be disallowed. And that means your accountant didn't do a good job, or that you didn't follow the rules, what the accountant told you to do, right? So make it real, make it legit, and there'll be no problem. And once the CRA sees that you're doing everything legit, they will not touch you again. I've had this experience. I am an expert with tax audits and representing clients with the CRA. So I like people to get audited, because if you get audited and your books are clean, CRA won't come back to see you again. All right. So keep this in mind. I think most of us would have 1 or 2 situations like this. Any questions? Okay. This one is also another big one. Invest in your business and yourself. So this, whatever I told you today, already covers my fees. If you put these things into practice, it covers my fees for the year, the amount of money that you would save from just putting maybe 3 of these strategies in place. So I've more than covered what you would be paying by hiring a good person who knows what they're doing. You don't have to hire me at all, because I'm quite busy, but I'm just telling you, wherever you are in Alberta, BC, find somebody who understands all these things. But you should know what questions to ask, and you should know what is available. So that is why we are training you, so that whoever you go to, if you ask these questions and they don't know, that's not the right person for you. So buy a better and a more reliable vehicle. Enjoy a better vehicle, get a higher deduction than driving up a beat up old car and paying more taxes. So a lot of us feel that, oh, you know what, my old car is okay. But you get frustrated, it breaks down, you have to spend more money, and you're spending more money on a piece of junk. A lot of us do that. Buy a new car under the business, under your corporation, have a business car, you driving a lot as a travel nurse. Enjoy a better, reliable vehicle. You'll spend less money on repairs and maintenance, less frustration. You'll have peace of mind that the car is not going to break down, and it will be a better deduction. If you lease the car, better deduction. If you rent the car, if you buy an electric vehicle, very good deduction. So again, that is something to think about. Okay, maybe if you are 2-3 years into your travel nurse career now, maybe a good time to think about another car. Then computers, monitors, armchairs, massagers, therapy equipment, office furniture, get creative here. You're a nurse, you work 12 hours. You need to have some kind of relaxation. You need to have some kind of rest at home. So again, get creative. What can I buy that I will use at home that I can also say it's for my business? Courses. So courses, very important. The courses serve so many purposes. First of all, it helps with our continuing education. So that itself is taken care of. A lot of us don't like to pay for these courses. I also don't like to pay for these courses. I like to take the free ones. But sometimes I do pay for them because there's value, and it helps me get a tax deduction. At the same time, it gives me more ability to take on something that is more complicated, right? So for example, if you're a regular nurse who works in the regular ward, maybe you can take an ICU course, and that may help you to go into ICU, or maybe operation theater assistant or something like that. That pays a lot more. So that's where you should spend your money, because it's a tax deduction, and in turn, it will help you to make your hourly rate go up. So that is how you reinvest in your business and in yourself. House cleaner. So we should not be cleaning our own houses, because we already have enough work. So hire a house cleaner. That's a tax write-off. You don't have to come home tired and have to clean your house. Your house will be clean every 2 weeks. That's a tax write-off. And you can spend that time to rest, rejuvenate, take on more hours if you need to, stay back longer, spend time reading, studying for your courses in that free time that you'll be spending on cleaning, which is really not something that you want to do. So use your time wisely. and make it a tax deduction. The last one is the accountant. Accountant's cost is around 2,000 to 3,000 per year to do all your tax stuff. You don't have to think about it. And the time and the stress you save on the annual fee of an accountant, you can make up in 3 to 4 shifts at a low rate of $60 per hour. I know all of you make much more than that. So you tell me if it's worth it or not to hire an accountant, because the annual cost is covered in just 3 to 4, maybe 5 shifts. So I think it's totally worth it. I have a house cleaner because I don't want to clean my house. I'd rather spend my 3-4 hours in making $100 an hour. I pay my cleaner $130. So why would I spend that time when I can spend that same time to make double or triple that money? Correct? Make sense, ladies? Everyone's very quiet.
Yeah, makes a lot of sense. Because,
Okay, there you go.
like I always say, I've been a victim of going with a cheap accountant, and I ended up paying lots and lots of
Vinay
taxes
knows.
because
She's
of
been through
that.
an audit as
So,
well. Yeah.
yeah, so I'll encourage you guys. Right now, I pay high tax, but if I'm going to pay high tax and get a tax return as a travel nurse, why not? Or pay way less tax.
Yeah,
indeed.
pay way less
So-
is important, right? That's important.
Way less, or if you're, if possible, get even a tax return, why not? So, yeah.
So basically, if you were on a T4 and making 150,000, 30% you don't see. Whereas as a incorporated person, you would pay 18 to 20%. So that 10% saving is a lot of money, right? So get the right person to do it for you and make sure that whatever is done on your tax return, you can keep. So if the auditor comes, you don't have to be scared. If CRA comes, you don't have to be scared because everything is done properly, legitimately, and you have all the documentation.
How do you know if you are with the right? What's the difference? Okay, let me reframe my question. What's the difference between an accountant and somebody that does your tax?
So there are a lot of tax preparers, as you know, right? There's, now you'll see during tax season, there'll be like boards coming up everywhere, little pop-up shops coming up everywhere. So anybody now can buy a software. Anybody, you don't have a certification or anything to do taxes. So basically tomorrow, say you don't like travel nursing, you can go and start doing taxes, but you don't know anything about taxes. So basically you're just taking the person's papers, putting it into a tax return and hoping that the software will do the stuff for you, and then you're filing the taxes. Now I see those tax returns all the time, things in the wrong places, things put in such a way that you're basically asking CRA, please come and audit me. So how much experience an accountant or a CPA has, and the number of years they have, and the kind of industry and kind of people they work with, that is what you're looking for, right? Because the more businesses the accountant works with, so tax preparer, I wouldn't really say, like most accounting firms or offices or tax preparation places usually have a CPA or an accountant. If it's just a pop-up shop like H&R Block, not good for these things. Liberty Tax, not good for these things, because these are tax specialists. They only do taxes and they only do on face value. They don't go deep. Okay? They don't charge you. They charge a lot. Like I charge less than these people to do taxes, but they don't go into the deep situation. They don't sit down with you and understand your situation, which is what your accountant will do. And then again, you should not be switching these accountants time and time again, because the accountant has worked with you to make a strategy for a long period of time. Now, if you change, then this new person has to again understand everything and change everything again. And sometimes, accountants, like, they have egos. They're like, oh, I don't like what that accountant did, I'm going to do something else. That's where then your tax return starts going that way. And then the CRA is like, okay, what's going on with this person's tax return? Let's audit them. But if your tax return is going this way, straight line, no fluctuations, everything is being done properly, all the deductions look legit, travel nursing industry, okay, this is the percentage. See, as per the industry, they know how much tax you should be paying. So if you're in construction, they know, okay, these people make a margin of about 30%. Travel nurse, they know these people make a margin of about 60%. They know, right? So when your tax return is all over the place, then you are a candidate for audit. So that is where the CPA person with, and not necessarily all CPAs also will be the best people, right? So you have to find somebody who's been in business for a while and doing business taxes. And what I'm showing you are the questions that you all should ask. And
Mm.
if that person is avoiding those questions or not able to answer those questions or wishy-washy, then you know that that person doesn't know what they're doing. So
Thank
you
you.
have an interview with the accountant, ask certain questions. You will get from your gut feeling, you'll understand whether that person is right. And then also the relationship should be good. You should get along with the accountant. It's not like, oh, the accountant doesn't talk to me, the accountant doesn't answer my phone calls, the accountant doesn't give me proper answer. That should not be the situation. You should
And
feel comfortable.
yeah, I also wanted to add that one other thing too about accountants is that it's good to have an accountant who already knows what goes on with the travel nurse, like what the travel nurse all about, what are some of the expenses about, what are their, like what is
Specific to each industry. Yes.
exactly. You don't need to be going through every single thing again to explain to them. And they're already familiar with what kind of write-offs you get. So yeah.
So you have to be smart when it comes to picking the accountant. That's important. There are a lot of good accountants and there are a
That's
lot of bad
amazing.
accountants, but
All right. So one last question from me.
yeah,
Before I became a travel nurse, before I started doing traveling nursing, right? I used to
yeah,
file my personal tax
yeah,
from my job. I used to have a
right.
T4.
Yes,
Now that I no longer have a T4,
yeah.
I do my traveling nursing. How do I balance the two? Do I still have to file my T4 since I don't have a T4?
So you could have a T4 because you can become an employee of your company. That is one way that you take out money from your company. Okay. And the two taxes are then filed separately. Are you coming on this for the first time or you've been here before on the Zooms?
The first time, ma'am.
First time, okay. So that's why, I mean, we've been over all this stuff before, and there's I think there are recordings of all the Zooms that Minette has shared on the Canadian nurse thing. So you could have a T4, and that is what we are actually advising for the travel nurses. It's the best way to take out taxes, to take out money from your company. Combination of T4, T5, or combination of just a T4 with maybe another family member or something like that. It all depends on your tax situation, how many people in your family, all those kinds of things. So you could have a T4, that's the answer, but it has to be set up. And then on your personal taxes, you would file that T4, and on your corporate side, you would file a corporate tax return. But that T4 amount would be tax deduction for your company, because basically your company is paying you a salary, and that salary is an expense to the company and becomes income to you. So
Makes sense.
makes sense? Yeah, good.
Mm-hmm.
So if you want, you want more answers, we can talk. I mean, I
Sure.
offer a 15 to 20 minute consult. So you can email me and we can set a time to talk.
All right. Thank you.
Okay, so the last one is the home office deduction. Many people have asked about this. So your home is your corporate headquarters. Let's think of it that way. Okay, the corporation doesn't have any place. It's just in the air. It's been created, but it does not have any office, physical location. So the physical location is your home office. The deduction that we take for the home office under the corporate tax is called occupancy cost. Why is it called occupancy cost? Because the corporation is occupying a space in your house. So it's an occupancy cost. So what we usually do is we take a flat amount depending on the kind of house you live in. If it's a condo, we may take $2,500. If it's a house, we may take $5,000. Depends on how much money you spend. So you can go up to 30%, but because you're a travel nurse and you actually work outside the house, unlike me as an accountant, I work in my house, so I get a bigger write-off because I have a bigger space and I'm always here. You are in the hospital. you are in your house or in your office only when you're doing administrative work. You may be doing your bookkeeping, you may be booking your appointments, maybe booking your shifts, talking to the agencies. So your amount of time in the house is limited. So in your case, I would go 10-15% max. So that's why we take, okay, this is your house, these are your expenses, take a percentage, and then occupancy cost is one item that we deduct on your corporate tax return. So when CRA comes to audit, they are like, okay, let's see, what is your occupancy cost? How did you come up with this amount? So for that, what we do is we usually ask the person to designate a specific work area. So if you have like a certain, say maybe you used your bedroom, maybe you use half of your living room, maybe you have a separate office space, which is space in the house that is not being used for anything else. So you measure out the square footage of that space and in relationship to the whole house. So say, for example, your house is 2000 square feet and you're using 200 square feet, that becomes 10%. Okay, so then 10% of the total cost becomes your occupancy cost deduction. Clear? Now, if you have a smaller home, so say something like 1 bedroom, and you cannot have a designated space, then we use a percentage, just a flat, because you're using, sometimes you're in the kitchen, sometimes you're on the, maybe in the living room, sometimes you're in the den or in the balcony. So you're using different spaces in the house depending on other family members and those kinds of things. So then we explain it that way. Then there is, okay, the items that you can deduct that you have to total up are your utilities. So your heat, hydro, security, if you have a security system, landscaping, if you have a house and you do landscaping, cleaning cost, so the cleaner that you have, any repairs and maintenance, and your water cost. So these are some of the items that you should keep available. Now you cannot deduct property tax, mortgage, and insurance because these are deductible only for commission-based employees or commission-based people. So these are these items, but there are ways that we can do these things. So again, talk to your accountant, tell them this is what my expenses are, give them 100% always, let them decide how much they want to take. I always say, give me 100%, I will decide what percentages based on all the other criteria, right? So that is it from me today. And I'm going to stop sharing so we can all see each other. Can't see anybody, but any other questions? I'm going to see if there's anything on the chat. Now let's open it up for questions. Anybody's got questions, then I'll take some questions. Or you can put it in the chat. I can see the chat and I can answer. How did you all like it? Did you all find any information useful? Did you all find anything suitable to your situation that you can use? Show of hands in the chat.
Can you hear me?
Yeah, I can hear. Vivian?
Okay. No, I mean, I just wanted to say, I really want to appreciate Memes for, getting us, into listening to you all, the experts in this tax, in, preparing taxes for travel nurses, most especially. I think after listening to you and many other people that have come on this platform, I am going to contact Memes because I think I'm interested in your knowledge as far as this is concerned, because most questions they've asked and the way you have explained it, I think I am a little bit more confident in, getting to know you better to be able to handle my taxes. So thank you so much.
You're most welcome. And I would highly recommend this recording. Listen to this recording and make notes of anything that is relevant and anything that you have further questions on, especially when you are going to talk to another accountant or an accountant that you want to hire. That's important. So listen to this recording again, save it.
Do you still take clients?
I do. Yes. It's difficult, but then because we are doing all this and because we are doing all this education, and then if I say, no, I'm not going to take you, that's kind of doing a disservice, right? So,
okay,
yes.
I'll leave my phone number. You chat me up, okay, or my email.
Yeah,
please.
Sure.
Thank you. All right,
my email address, I'm putting it here. Best way to reach me is email because telephone is extremely busy. It's tax season right now. Everybody who emails me will always get a response. So save my email address. email me, and then we'll communicate.
Yeah.
And then if you want to set up a meeting, ask questions, we can do that initially.
Okay. Thank you so much.
You're most welcome. I'm here to help and I'm here to guide, and I hate the CRA, so I'm on your side.
I know.
All right. Anybody else?
All right. Any more questions, guys?
Minette, how did you like that?
Yeah, I was waiting for everybody to talk. That was splendid. That was very, very educative. Honestly, guys, I really, really would appreciate if we are really all participating, sharing our reviews about these educations, because there is lots of scamming going on, and many people, they don't trust all of the Zoom posts that we post. And that's why I've insisted on my group that I am the only one allowed to share any Zoom on my page, because I let everybody advertise their nursing, whatever related stuff. But when it comes to the Zooms, I want to build that trust and confidence for people to know that they have people that care about them, that are willing to educate them for free. So please, when you guys attend these Zooms and you learn from it, please, all I beg from you guys, when you go to the group, share the information there that you've learned, and this is your review about it, and this is what you think. You think maybe people should come for it, and these people are taking out time from their professionals. We as professionals, as a nurse, you and I, we cannot go and work for free. We cannot go to work per hour, 2 hours, and come back home and they don't pay us. We nurses will go crazy. Yet these accountants that are willing to educate us for free. So please, 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 all we are asking for is to leave reviews, encourage people, participate in the Zooms, make it worth it, make it worth your time, your effort, your energy, as well as theirs as well, so that that's the only fulfillment they require from us.
Yeah.
And yes, please.
Spread the word to other people who are in the dark. There are a lot of people who have
because they
gone
don't
down this path.
they don't even need us to use them as their tax as their accountant.
We are busy
But
enough.
if you use them, that's great. If you
We are
use them, they
busy
already
enough.
know the in and out of your tax. They know about your tax way better than you. They know about your finances way better than you. So you use who knows. They say follow who knows road. If any pidgin speaking person here, follow the person that knows the road to where you're trying to go to. At least it helps you to fulfill, stay out of trouble and stay in your financial confidence, knowing that you are comfortable in your taxes, in your administrative aspect of your travel nursing job. And that way you're at peace of mind. You wouldn't be paying $60,000 tax return for me, because that's what I had to pay before I realized what it meant by having a good accountant.
When will the recording be ready? Because I missed a few minutes of this, so I want to listen to it again.
We'll share it on I'm not sure because I'm
Zoom?
on vacation, but I would, once I have a minute, I will share it on usually I post it on our YouTube page. There's lots and lots of recording
you have a
sharing.
YouTube page?
Yeah, Canadian Travelers. The same icon that you see on here, that's our same icon on YouTube.
Okay.
Yes.
Okay.
Yeah, so we're here to enlighten you guys. We're here to bring awareness, knowledge, growth, and financial confidence. That's all.
Okay. Thank you so much.
You're welcome.
Okay. Thank you everyone for attending.
Thank you guys. I'm gonna end the Zoom now, and thank you all so much for being there.
Okay, bye-bye.
Thank you, Tania. You're amazing.
Thank you. I tried.
You're perfect.